Welcome to another 21 Hats Dashboard. I'm Lauren Feldman, and I'm here with Mike Butler, who is CEO of Grasshopper Bank. Welcome to the podcast, Mike.
Oh, thanks for having me. I'm excited about talking with you.
My pleasure. Really happy to have you here. Tell us about Grasshopper. What's its mission?
Well, Grasshopper's mission is to serve the, business and innovation economy in a digital fashion. So we believe that the movement within our client base is to be more technology oriented and digital. And small businesses in particular are moving more rapidly in that direction. And our mission is to serve them with financial services products that are delivered digitally, kind of like supported by good human capital, but makes it easy to work with us.
Are you a bank or a fintech or both?
We are a OCC chartered bank. We like to say that we are a fintech with a charter. Obviously, technology is a really critical part of what we do every day, and we have embraced the fintech evolution that's been going on for the last 10 or 15 years. And we can talk a lot more how we do that. But we are, a fully, FDIC chartered bank governed by the OCC.
And you also do other things that banks do, like SBA lending, correct?
Oh, we're a full service bank. We like to say that we're a full service bank just without branches. And we are focused on, again, providing the customer with the, that Amazon-like experience that they have become accustomed to in their day-to-day world that they don't always seem to find when they start to work in the financial services sector. So we like to say that we're the Amazon of financial services.
Tell us a little bit more about that. What are you able to do in that regard for businesses that they might not find at a more traditional bank?
Well, I think we always start with the core product that we think is important to small businesses, and that's their checking account. And so we have developed with our partners on the fintech side, we think an industry leading and award winning kind of platform that allows our customers to open their core DDA account in about 3 to 4 minutes per signer. And that allows them to, that right there is a big difference between working with other community banks in which you have to walk into a branch and open a checking account. Sometimes people tell us it takes over a week to get that done. So this is a 3 to 4 minute experience, no paper, that gives you access to an industry leading, digitally driven demand deposit account.
Got it. What's your background? How did you wind up running a bank that focuses on small businesses in particular?
Well, I was, I got out of college and I started to work with a big bank, KeyCorp. It wasn't as big when I started versus when I left, but we ended up to be over $100 billion. And, I think what you start to realize when you're in the bigger bank environment is, first of all, unless you're the CEO, you can't change culture. And so that was a big driver for me is, I wanted to, run a bank that had a very clear culture of customer service and client first and digital. And so, I took the opportunity to work with a small community bank in Boston that was looking for some direction. And we just got into the whole concept of how do you build a digital bank? What's it like to say to yourself, where is the industry going, right? The old Wayne Gretzky line of where's it going versus where it's been. And I don't think any of us were genius as to where it was going. I think everybody knew technology was going to change the way people worked with banks, but it was how and when that I think was, the part of it that was important for us. And we decided to be early adapters. And again, we closed branches and developed digital platforms and started to acquire clients, via our, digital account opening.
I should point out this is a sponsored podcast. We're just getting to know each other, but we hope to build a working relationship together. Given what you just said about working at that community bank and getting to know your customers in perhaps a different way than traditional banks have, do you see business owners making certain mistakes over and over again? Are there things you've picked up that you would share that could be beneficial to business owners?
Well, I think back to your question previously as well is we felt like as the digital evolution continued to evolve, consumers, throughout the pandemic started to adapt to these, the idea of working with a digital bank, and then businesses were the next great place to go. And the part about businesses is small businesses. There's no CFO, there's no chief of marketing, there's no chief technology officer. It's like these small business owners do everything themselves, and time is critically, is critical for them. So providing the digital solution was something that we really felt could help the client, that business client, just spend more time on the business side of it than the financial side of it. And when it comes to mistakes, I mean everybody makes mistakes. We all make mistakes, and but I think the thing that sometimes happens is that when you don't have time to think through the real financial solutions, you end up maybe with more expensive ones, or sometimes you end up with products that don't naturally fit your what you need to solve the problem. And I think that's the rub that I always seem to find with businesses. I don't have the time. I wish I had the time to think through that a little bit more. And what we're trying to do is provide that business owner with something that we think is tailored to their needs and that also can save them time.
The one place that I hear owners talking about most frequently in terms of time and bureaucracy and difficulty is in applying for loans. And that at some banks, that application process can be almost never ending. Is that an area that you've been able to address?
Yeah, really. It's the time consuming part of it. I'm not gonna, yeah, I could spend forever here with you on this, but in our early stages of moving into digital, what you find out that the paper generated questions and data requests that are being made by a lot of traditional banks today are no longer really viable to, or necessary when it comes to making a good credit decision. There is so much data out there that we use today in our scorecards that allow us to make a really good credit decision about a particular client and reduce that friction. That's the word we battle all the time, right? Is how can we eliminate the friction in the process? So asking people simple questions like, actually, what do you do for a living? I don't need to ask that question. I know because I know based on the data that I can get out there about the individual, company. I know what business they're in. They don't have to tell me. Sometimes I don't have to even ask what their financial position is because I can also get that via the data sources that we pull down. And when we go through we have two particular loans that we like to talk about with small businesses. One is, just a regular term loan in which clients can apply and fill out an application in literally minutes with maybe answering 15 questions versus 50. And you're going to get an answer back fairly quickly. Now, it's not always yes, but you're going to know fairly quickly whether or not we think we can provide you financing. And again, I can't be all things to all people and I can't provide credit to everybody, but I'm going to tell you quickly whether or not you can, I can or I can't. And then I'm going to go through the process fairly quickly. And then the other is an SBA loan. The SBA loan is traditionally very, very paper intense, time consuming. And we've spent a lot of time digitizing it and using scorecards to, be able to make credit decisions within the guidelines of the SBA that allow clients to, I guess, again, answer 15 versus 50 questions that will allow them access to that credit that they're looking for. So it's just that, I hate to make it this simple, but when you think about how we used to operate day in and day out in all of retail and how time consuming it might have been, all we're trying to do is reduce all of that friction using technology.
It sounds like you're addressing the biggest frustration that I've heard from owners, which is they talk about how difficult the process can be to apply for a loan, especially an SBA loan. But what really bothers them is how long it can take to get an answer of no. And they often go away suspecting you knew you weren't going to make this loan, or you could have known almost instantly, but you kept me waiting for a month or longer. Can you give me an idea how when you say fairly quickly, how quickly might that be?
Well, yeah. First, I'm going to start with a culture, right? So, first of all, the culture of client first is really important when you think about what we've tried to, kind of develop inside the company. And it's really, I use these kind of old school analogies, but I mean, if you think about the branch network, and I'm not being critical of anybody who uses their branch network, but the branch network tells you I'm open from 9 to 3, and come on in and get in the queue and wait in line to cash a check to get my money and or to do business. And today we've said that's not client first. That's like business first. So the idea has got to be client first. The idea is how do I solve the client's needs, help them solve their needs. And the attitude that's put into everybody and the culture says, I'm not going to delay a decision. I'm going to do the best I can. Now I want to make a good decision, so I may have to ask for more information. But other than that, the answer is no. And we're given no and yes answers in like uh, I'm not saying, well, okay, I got to be careful, but it's less than an hour.
Wow.
Less than an hour, you're going to get a response from us, yes or no, or I might need more information, but you're going to get a response from us.
If you give a yes, is the offer going to have a rate that's closer to what traditional banks offer, or closer to what fintechs and alternative lenders offer?
Oh, it's closer to what banks would offer. This is the bank-driven product. We're a, we are not really a non-prime type of company, so we operate in, what you would normally see in the bank environment. SBA loans are prime plus two. Some of our term loans may be a little bit higher from maybe 100 basis points more than that, but you're in the same range. This is, again, we're not a non-prime lender, so the rates are bank-like.
Are your standards any different from a traditional bank in terms of whether you will make a loan or not?
No, I'd probably tell you that the people who work around me would probably say that, our credit appetite isn't as big as maybe some others, especially in the non-bank world. That's, if 12 o'clock is perfect, we like to say we're 11 o'clock, maybe slightly more conservative. But I think the answer for us is that we're using a digital platform that can reduce the friction as it relates to the approval or the application and approval process, and so speed is kind of important here for us. Credit's hard. Given lending money is hard, and so we like to make sure that it's saying yes to everybody is not our idea of client service. Let's put it that way.
Well, it's not a way to run a business either.
Right.
Is it your sense that access to capital is getting any easier or harder right now?
Well, I would probably say that access to capital is probably easier than it's been in the past because of the evolution of digital lenders and non-bank lenders in the marketplace. And that's good for small businesses, and it's frankly good for competition. We all need competition. And I think the use of technology by people outside the bank to help make good, solid credit decisions and to understand why it's good or bad to make a loan, I think has advanced. So there's more places to go today than there has been for small businesses to get credit, in my view.
Are there types of businesses that are not a good fit for Grasshopper, whether because of the industry, the region, or the size, any other aspect?
Well, yeah. I mean, we're not, we would think that there's certain niches that you need to be an expert in to lend money. So today, we are not lending money into the cannabis sector. And the reason is because we think in order to do that, you have to do it really, really well and requires a great deal of resources and a focus to get that done. So those would be the areas that we try and avoid, areas that might be perceived as riskier, that would require some expertise. So maybe direct crypto, cannabis. Some international payments businesses are hard for us to deal with, but they're fewer and far between than the normal businesses that are out there. And we've tried to embrace the kind of evolving what we call gig economy that's out there, in which there's individuals doing business. They're themselves, they're their own brand, and that's something that we embrace, and that's something that working. Those are technophile, usually kind of people. The evolution of the small business owner from owning a manufacturing company to being in the gig economy is really where we've also, I think, done well providing our products and services.
One thing owners have traditionally been told to do is to try to develop a real relationship with their banker, especially if they're interested in borrowing money. And it's the kind of thing that's, can pay off in terms of, getting a normal loan, or it was something that people said was relevant during the early days of the pandemic with the PPP loans. Is that something that you do despite not having branches? Is there still a possibility to develop a personal relationship, or is that not part of the equation?
Well, it's the definition of relationship, right? So and again, there's a couple parts to this answer, but first and foremost, I tell you that, we have a relationship with you as soon as we open an account, and we get to know you, maybe not with a direct human touch, but we get to know who you are. We understand who you are. We understand how you transact, and we understand the quality of your business from all the data that we would have. So that's great. And so you could use chat to talk to a customer service rep, or you could use just, I want to talk to somebody. That's one of your choices. Now, people wouldn't always define that as a relationship, but in today's digital world, that is a relationship. Um, more on that is that we've said there is benefit to a human in the loop. So what we tend to do is, after, like, as you would open a new checking account with us, and you'll get a reach out from us that says, "Would you like to talk to somebody?" Right? And if you would, we're here to talk with you. You don't have to, but if you would, we're here to talk to you, help explain maybe the accounts to you a little bit better, help you get over some questions you might have. But that's your choice. So we offer you the choice. And I think today, the last piece of data I got is about 15% of the new clients who open accounts do ask for a conversation with somebody, and we have it with them. Then I would say, we do have some kind of specialties that are dedicated towards startups, right? So because of the technology nature that we're involved in, and our work with fintechs, we're pretty close to the startup community, and we have dedicated more human capital to talk to the startups that might be going through fundraising activities there, where we can connect them even to other parts of our organization that work with venture capital firms. And we also, if you went to our website, I think, have a marketplace in which we offer kind of non-banking products and services at some level of discount or priority into the client base, in which they can also get some solutions to their problems. So that all in is I think today's relationship versus walking down to the corner and talking to Frank and saying, "Frank, you know me because I'm running the hardware store." And I mean, the problem is Frank's not there all the time, and people change, and so we've tried to put that relationship in the form of a digital solution package.
Well, it goes even beyond that, because one of the things you hear owners complaining about is that they do develop that kind of personal relationship with a smaller bank, and then the smaller bank gets bought by a bigger bank, and suddenly everything changes.
Yeah, those things happen.
Now, you actually have a merger pending with another company called Enova. Can you tell us about that?
Yeah, so this is really one of the. I've been in this business for a long time, and mergers and acquisitions inside the banking industry have taken place, a lot over the years, and it's we used to have 15,000 banks. Today we have four. A lot of it has become because of the digital nature of the client's demands. But with Enova, this is a fintech that is serving the small business community with predominantly digital lending capabilities. And in partnering and marrying up with a company like Grasshopper that has developed digital deposit gathering capabilities and was growing into more digitized lending, just like we talked about with our SBA product and with our term loan. And now to partner with somebody who's been doing it for 15 or 20 years, at a level that Innova's been doing it, it's just a great opportunity for bringing two companies together that I think the revenue synergies are, pretty dramatic. But the one most important thing that we have with this transaction is you're talking about a fintech that thinks like a fintech and a bank that thinks like a fintech. And so by bringing this is the cultural part of this that's so important with any acquisition that you take place, and surely in the financial services sector that you've got cultural connections. When you talked about that bank that was bought and the same people aren't there, a lot of that is usually because there's maybe a different culture that has overridden what was there before. And what we're excited about with the Innova transaction is that we are incredibly culturally aligned from a client perspective. The use of digital, quick answers, serving the business community, focused on the business community. Those things are going to really enhance the opportunities for both companies to now offer better products and services together.
Innova has its roots in kind of higher cost lending. It owns On Deck, which I think many listeners are probably familiar with as a digital lender. Do you see any conflict between the two approaches to lending?
No, I really don't. I don't want to get too specific on some of those, the lending part of it, but serving businesses that need money. You asked me the question before: is do you think there's more access to money than there has been before? And my answer was yes. Well, Innova has been a part of that to be able to understand the small business community and provide loans where otherwise companies wouldn't be able to get them because they understand it and they use some of their technology to understand the client better. It's there's good things that come from lending money to companies that otherwise wouldn't get it from traditional banks.
The thing that the alternative lenders often get criticized for is for not disclosing the actual APR that they're charging for a loan. Do you think small business borrowers should always know what the APR is?
Well, yeah, yes, that's a good thing to know. But APRs are, kind of like they're not always indicative of the value that the lender is providing. The length of the loan and the size of a fee impacts your APR, reported APR. I mean, I'm not the expert here, and I don't want to come across as I understand exactly the financial calculation here, but it is as simple as that. And if a small business needs a loan for 30, 60, 90 days to be able to, maybe finance some inventory that it otherwise wouldn't be able to finance, that leads it to more profitability, paying a fee to get that over the short term seems to me that the business owner is making the right decision to get that loan. And then the resulting APR is really the result of the length of time that the borrower used the loan, which, it kind of in a weird way, the quicker you pay it back, the better off it is. And it creates a higher APR. So people like overreact to it. But the business isn't complaining because the business got the loan that it needed to buy the inventory that led it to a more profitable position. There's if you're a small business and you have access to credit and that fee doesn't wipe out your profitability and it's a good business decision, that's a good deal.
There's no question that happens all the time and that businesses do benefit hugely from that. There are situations where businesses turn to that type of lending because they're kind of desperate, and often it spirals downward from there. Is there a line you see where you can draw between those two outcomes?
Well, yeah, I don't know, it's hard because there's really a moral issue of do you lend money to somebody who you don't believe can pay you back? Um, And, nobody wants to do that. At the same time, I can't make decisions for the borrower, right? So if the borrower chooses to take some money and then that's a spiral, then it's just not the right. I can't control that decision, right? The borrower has to control that. And if you went to our website, you'd probably find a couple of tools out there that would help the businesses understand when or when not to borrow money. And those are the things that we try and help them with. But it's kind of a borrower decision there.
Is AI changing the way Grasshopper does business?
Yeah, for sure. We're very focused and disciplined with AI. And what we've done is we've taken the approach that it's most important for everybody in our organization to know how to leverage AI to do their jobs better and more efficiently. And what we believe is that AI will not take your job, but somebody who knows how to use AI will take your job. So it's kind of like a cultural thing where we've said, guys, you got to know how to use this, and we provide tools and training, and we monitor the effective use of AI inside the company at the employee level first. And I just did a presentation and presented a graph, and I think we're at 90% of our employees are using AI daily. And so that makes me feel really good that we provided our employees with the right tools for them to be successful in both the business world. And frankly, we talk about the work-life balance and all the things associated with it but using AI in your day-to-day world is probably good for you too as the world evolves. And we take this from a real kind of slow perspective. I'm not trying to get to the moon. I'm not trying to do things that are crazy. But I am trying to use it day in and day out because it's kind of like the personal computer. If you want to ignore, if you wanted to ignore the personal computer 30 years ago and pull out your abacus or whatever we call it, you wouldn't have a job. So that's where we start. And then amazingly, we also are very sensitive to people's fear of AI and their job. And so when you get them engaged in using it and they become more productive and start to create more opportunities to use it, they feel more in control of their job than fearful of it. So getting them to use it overcomes the fear. And then that fear leads to more and more kind of bottoms up ideas about how to create efficiencies in everything that we do. And then it's evolved inside our company from really backroom oriented now into some of the things that we just launched, our MCP, which is allowing our small businesses to use Claude to ask questions about their checking account, which we think is an unbelievable tool for businesses to be able to, again, save time, understand their finances better by using AI that's connected right to their checking account.
Well, what kind of questions would someone ask Claude about their checking account? What is it you have in mind?
Well, who's my largest accounts receivable? Who's my largest accounts payable?
I see.
Have I received a payment from XYZ? So all the things that you might be scrolling through your kind of statement to find, Claude can find that for you. And so moving our AI kind of culture into now serving the small businesses with better tools is where we're getting to. And the next part of this is using AI to improve even turnaround time. I quoted some turnaround time for credit and loans, but those are usually like deals up to 500,000 or 350,000. But if you're applying for a $3 or $4 million loan, and small businesses can be doing that those take a long time in most banks. Now we've been deploying AI to reduce turnaround times in that more complex area, and that's that evolution of kind of where AI can get you to in the more complex ideas. But you got to start at the very beginning. Our view is, and get your people trained on it, know how to use it, overcome that fear, create efficiencies in your organization, and move into more customer facing concept. You can't jump from zero to get to the moon, right? You have to build it inside your company, or at least that's our belief.
Do you think small business banking will look very different in, say, 5 years or so?
Well, I think, you know, Yeah. I mean, I think it's hard to say 5 years with this technology that
Sure.
things are going to stay the same. I think, first of all, you hope that there's more companies like Grasshopper that have embraced the digital side of it and have leveraged AI in a positive client facing world so that you have more choices. I mean, everybody likes choices. So I think that's going to evolve. And I do think the credit part of it's going to get better and better and going to go to larger and larger transactions. And then I think the customer service side is going to be, far improved with talking to people that, I mean, we all know we can talk to somebody who's not that person, right? But that concept of being able to have a conversation with somebody who's incredibly knowledgeable about their account is going to play a bigger role in customer service, I think.
Have I missed anything? Is there anything you'd like to impress upon our listeners before we wrap up?
No, I think that, one of the things I always say is, if you're going to serve a group of people, goes back to my comment of niches, is you got to really be dedicated and focused on it, right? So I say to any listener, make sure your bank understands small businesses and that they've got real tools for you to be able to be successful that can help you day in and day out. And remember that you're the client, and you deserve great service and great products.
That's a really interesting point, to make sure that the bank understands small business. Is there a question you would suggest a business owner ask his or her bank to determine? How do you figure out if a bank really cares and really understands small business?
Well, I think it's, the simple part of it is when you're a small business, do they understand that time is really important for you? And you don't have like 4 or 5 people working for you who can wait in line or come back next week or call back later, right? So those are the early stage, I think, things when you go to somebody's website. Does it really prominently promote small businesses, and are there really digital tools there for you to be able to use? Just like any other kind of business or website that you use, you can tell whether they've really committed to technology and serving you in a different way. And I think that's what you can do easily, is just, find out from that perspective.
Mike Butler is CEO of Grasshopper Bank. Mike, thank you so much for taking the time.
It was a pleasure.
My pleasure. Take care, everybody.